Hi, myself Daniel from PMS Bazaar.
The most difficult part is to introduce ourselves generally. So to introduce myself, I'm Pallavarajan, representing PMS Bazaar, and I'm one of the founder member of PMS Bazaar.
Right, come on, take a seat. Come and take a seat.
Hi, good evening. This is Hamid Rahman from PMS Bazaar.
Great. Take that mic home with you. I mean, sit down to your new home, which is this chair here. Here, gentlemen. Thank you. Did everyone hear those introductions? They got a group of people talking about India investments. I can't wait to hear. Tell us something good. Tell me about some good returns, will you? And take it away. The clock is going to go, so you know exactly your time on the clock. Leave a little extra time for questions, and I'll see you soon.
Good evening and welcome you all. I'm excited to host this session, Landscape of Alternative Investments in India. With me is Mr. Pallavarajan, Founder Director of PMS Bazaar, and Daniel, Founder Director of PMS Bazaar, and Hamid Rahman, Founder Director of PMS Bazaar. Now, this is the first question. What are the alternative investment products in India? Who can invest in this type of products? Pallavarajan, you can take this.
So let me take these questions.
Pallav, I think you're not audible.
Am I audible? Okay, great. So even before answering the question, thanks to everyone and feeling privileged to be here.
No. You're.
I'm audible, yeah. So let's understand what is alternative investments when it comes to India. Basically, it's nothing but it is an hedge fund globally, which is popularly termed as hedge fund, is a alternative investments in India. Now, when we look at asset management companies, basically there are three different vehicles, basically product. One is mutual funds, which is more popular across the globe. And then in India, we have two more products, which is unpopular 4-5 years back. And we are proud to tell that, today it is as popular as mutual fund because PMS Bazaar has played a vital role to make this product more transparent and more popular. Now, what is the difference between these three products? I'm sorry, I forgot to mention these other two products. One is PMS and one is AAF. PMS is nothing but portfolio management services, and AAF is nothing but alternative investment funds. Now, what is the difference between these three products? Why a country should have three different products? It's a very simple note. So basically, mutual fund is meant for retail investors. Predominantly, risk weightage is given more when it comes to mutual funds. The regulator play a vital role. It's tightly regulated, perhaps when comparing with PMS and AAF. And it is purely meant for a retail client. And when I mean retail, to start investing, if somebody wants to start investing in mutual fund, it is as low as maybe a couple of 6-7 USD to start with. In INR should be even at 500 rupees we can start mutual fund. And coming to PMS, which is the next product, the minimum investment ticket size for PMS in INR it is 50 lakhs. And in terms of USD, it should be about 65,000. And the next product, which is alternative investment funds, where the minimum investment is 1 crore in INR, basically, again, $130,000 in terms of USD. So the basic difference is the investment size, but there are a lot of difference when it comes to how the product has been managed. So put it in simple terms, alternative investment, there are two products. One is PMS and one is alternative investment funds. And who could be the investor? To answer that, the minimum investment should be 50 lakhs for PMS and should be 1 crore for AF.
Who can invest in this type of products?
Yeah, I've been mentioning. So if you look at the population in India, it is about 130 crore, which means 1.3 billion. And if you look at, and in terms of per capita, or should be about 2000 USD, which is actually 140th or 150th rank when comparing in global terms. But if you look at our GDP, we're at 3 trillion. If you look at our market capitalization, we are at 3 trillion. But if you look at, when comparing with the population, the potential client is less than 1% who could afford sort of 50 lakhs or 1 crore sort of investment at this product. So ideally to be a client, and you should be able to invest. So it is a product is meant for a high net worth individual.
Mutual funds and ETFs are most popular and the largest investment product in India, because the size of mutual fund is
Yeah, I'll
very
take this
big.
question.
And how PMS and AIFs are different from mutual funds? Can you explain in detail, Danny?
Yeah. So, pleasure being here. Mutual fund is, as Pallav mentioned, it's mainly for retail investors who can start his investments probably with $7. And ETFs are largely passive funds, which is predominantly very, very large in European countries and USAs, but it's very nascent stage in India. So right now the passive funds, what we call ETFs, are slowly catching up in India. Barring that, the other alternate funds like PMS and AIFs, so there are 350 plus portfolio managers are rightly available in the country, out of which there are 140 plus portfolio managers. They are managing clients' money through various investment products. So perhaps we can call this as a privately managed account. So in abroad and other foreign nations, they call it as a privately managed accounts. So where in India it's called as portfolio management services, which is tightly regulated by the regulator, which is Securities Exchange Board of India. So recently they have come up with a lot of circulars and amendments whereby it strengthens the product and also bring a lot of transparency to the system, and which will empower the investors as well as the intermediaries of the products.
What is the size of AIF industry in the past and present across the globe?
See, if you look at, we're talking about the size even before going to Indian size, let's look at what's happening globally on the alternate side. Now, even before looking globally on the alternate side, let's look about what is the asset management industry size globally. I think it is about 130 trillion USD is the asset management size across the globe. Now, within that, if you look at alternate space or including hedge fund, I think the percentage is about roughly, it's about 20% is on the alternates space. And if you look at the growth, what we have seen globally, it's growing about in a higher single digit, somewhere about 8-9% growth, what you have seen for last decade. The interesting part when coming to India is that this product is more popular for last 10 years, even though the PMS is there for more than 20 years track record, but we have seen that there have been a lot of affluents we could able to see in last decade, and hopefully we'll be seeing more affluents going forward as well. And having said that, the industry growth, if you look at last 5 years, is very, very interesting. The highest entry point product is alternative investment fund, which means 1 crore, which is about $130,000, as I mentioned earlier. Now, if you look at mutual fund, the minimum investment is $6-7. You can just start with 500 rupees in Indian terms. The growth what we are seeing at mutual fund and the growth what we are seeing at alternative, if I'm going to compare this both, alternative investment industry is growing significantly higher than the mutual funds. It is growing at a stupendous rate of 50-55%, and it has grown 10 times, when I compare 5 years. It's a pretty new product for India. It's almost a decade old. And in the last 5 years, it has been significant. And if you take even last 3 years, it has been significant. Why I'm talking about last 3 years is because of, in between, we had a lot of challenges like pandemic. In spite of that, there is a huge growth on the alternative investment fund. I'm talking about AIF. When it comes to PMS, if you take last 5 years, it's been growing about 14-15%. But the interesting point is that one challenge what we saw in India is that, not just in India, across the globe, is sort of the pandemic challenge. So during this challenge, of course, there was for a few months there have been challenge in terms of the number of client addition or the size growth. And also we have seen that there has been market drop in terms of market capitalization, but eventually it has moved up now. But more than a COVID, there was a biggest challenge which has come for PMS. The regulator has increased the size from 24 lakhs to 50 lakhs. And it was announced just before the COVID. And unfortunately, it has been implemented during the COVID. And there was a double challenge for PMS industry. And it was a surprising response from the investors. We thought, it'll not be as, before COVID flow, it continue post-COVID. But fortunately, it's surprising to see that there is a significant flow which is coming in PMS as well. That's a very good sign for being at PMS or being at AAF. Now, talking about the size, overall as an industry, it is about 10 lakh crore. I'm talking in INR terms. And I told about the growth broadly put together as these two products. Out of this 10 lakh crore, 40% belongs to this PMS product and 60% belong to AF product. And in terms of growth put together of these two products, it is an average about 25-30% in spite of COVID. I'm talking about last 5 years. And even if you take a decade of the growth, it should be still at a very strong 20% plus growth. We foresee at least 20% growth, at least for the next 5 years or 10 years. In fact, the PMS Bazaar, as a company or research team, has come out with a report stating that in the next 10 years, the industry will grow at least 5 times from here. So that's this report you can just Google and find out. And a very interesting report. And the interesting part again is that almost all the media, financial media has covered this report. It gives a lot of numbers about how the industry has been and how the industry would grow. And we put a lot of effort to bring out this report. So broadly, this is the size of the industry. Past has been good in spite of challenge. There have been 2 challenges. One is, pandemic, which I told. Second, I've been mentioning about per capita, which is 2,000 USD in India. In spite of that, look at the minimum investment, which is 130,000 USD for AF and 50 lakh rupees for PMS. In spite of that, there is a significant growth, which shows there have been a lot of affluence which is coming in. And second, mutual fund is a plain vanilla product, and we have a great respect to mutual fund, but there is no differentiation for a retail client and for a HNI client at mutual funds. I see there is a gap. Now let's say a client who put 1,000 rupee, and let's say the client who put 1,000 crore rupee, there is no different on the product. Whereas an alternate space, being it AAF or a PMS, there is a lot of flexibility, a lot of transparent, and a lot of customization is possible, depends on the size. And more than a size, each clients are unique, and their profile could be different, their need could be different, and accordingly the portfolio manager could construct the portfolio. So this is what actually client need. And I've also seen that one more interesting part, SEBI, which is regulator in India, has been very, very efficient to ensure that this alternate industry should also be tightly regulated. Generally, any new regulation which happens every decade, we have seen that in last 3-4 years, there have been plethora of regulation which is coming in, and which is making this alternative industry to grow strength by strength. So put together all this factor, I see there would be at least 20% growth for at least for a next decade time.
See, most important thing on the alternate spaces is that the investment in the private equity, that is a product structure itself, is like for many of our entrepreneurs and everything, that is what the pre-investment on the private equity products can be done only in alternates. So that is the biggest advantage, and people are been investing over that. Then that is why we also see our many businesses are flourishing out of it.
Again, why the growth will be more in India when compared to the rest of the world?
I think I've addressed that. Basically the affluence, the potential is keep increasing. Or GDP, it took 75 years for us to reach 1 trillion, and to reach 2 trillion, it hardly took 7-8 years. and we are currently, little over 3 trillion. It took again some 8 years, and our Prime Minister has a vision of 5 trillion, and I hopefully it should happen in next, with the growth what we are seeing now, it should happen in next 7-8 years. Even at worst scenario, it should happen in 10 years. So the growth, whatever we have seen from the independent, which is 1947, the similar growth can be seen in just few years. So what happens, our per capita will increase, the affluence rate will increase. So that is a huge opportunity. And we could actually see in the numbers what we have seen in last 3 years. And the best example which I have given is AAF. I think this affluence and the growth story of India will be a major factor. And our growth, I told it is going to be minimum 20%, and AAF surprisingly the number for last 5 years is about 55%, whereas the global industry is 10-12%, 8-9%. So we are in terms of global average, we are growing 5 times more than the global. So that is the kind of growth what you are seeing, and hopefully it should continue, over the years.
Can you tell me how many accounts are there? 50 lakhs ticket size, the growth.
Yeah,
I've been total number of ticket size.
Yeah. I've been mentioning about the population of a country, and it should be less than 1% who have affluence to invest such a significant amount. In mutual funds, the number of unique investors are about 3 crore. 3 crore. And if you take direct equity, it is not being managed by professional but managing themselves, it is about 8 crore, 7.5 crore. And again, interesting point of the demat account is that in the direct equity side, the 8 crore number which I mentioned, the incremental 4 crore, which has come in the last 2 years, 2.5 years, which is post-pandemic. And looking at a PMS, the number of clients who have invested is about 1.25 lakhs. It's very thin in number. And unfortunately, SEBI has not reported the number of clients for alternative investment side. But my sense, it should be less than a PMS, because the average ticket size is very higher at alternative investment funds.
What made you to start this company, PMS Bazaar? How PMS Bazaar is helping the industry and the investors?
See, before we start PMS Bazaar in 2017, so we don't have enough information about these alternate products in the country. There is no single platform or even a portfolio manager platform whereby you can able to see the latest performance of their own funds. So that is the whole idea to address this pain point. We started this company, PMS Bazaar. Whole idea is to aggregate all the alternative asset products into a single platform, whereby it can be accessed by the industry people, intermediaries, the distributors, family office, wealth managers, and so all sort of people who want to invest into PMS. Before, as Pallav mentioned that the investment into PMS, it minimum takes 70,000 USDs, right? So to invest into a mutual fund product where it asks for a minimum demand of say 7 USDs, where you have plethora of platforms. They offer direct mutual fund platforms, and lot of other IFAs and distributors. So they also have enough knowledge about the product whereby they can go and sell the product. But as PMS and AF is concerned, so the information is very less on the internet. That's why we created this company called PMS Bazaar. To start with, in 2017, we just started with roughly about 14 PMS strategies. As we speak now, we have 270 plus PMS strategies. It's both equity as well as debt PMSs in the country. The idea is to aggregate all the PMS products to the extent whereby we can collect all the detailed informations and to give all the possible analytics, so that based on that the family office, wealth managers and others can take informed investment decisions. So apart from that, we did a lot of new initiatives on the PMS and AF side. So the recent tie-up with CRISIL, I hope everyone knows about CRISIL, the India's prestigious rating agency. So PMS Bazaar is the first Indian company to tie up with CRISIL for rating the PMS strategies. So which will give lot more information and conviction to the buyers to take a informed decision before investing into any sort of PMSs. So slowly we can extend this ranking services for alternate investment products also. And apart from that, we recently come up with an analytics platform called Finalica, which is largely used by the family offices, wealth managers, and a lot of banks and their representatives are also using this platform so that they can educate their client before investing into their PMS and other high-ticket products. A classic example is like ADIA, Abu Dhabi Investment Association. Also, they are evaluating this platform for last 3-4 months. So we will get premier investment institutes like ADIA also be a part of this Finalica platform, so that this platform will give a lot of insights not only for the wealth managers, also it will help in a larger way for the family offices to take an informed investment decision. This is the whole idea. We just created this company called PMS Bazaar, and eventually over the period of time we will be coming up with a lot of new innovations and other stuff to empower the investors and the industry.
Could I add something here, sir? Yeah. See, to put it in a simple term, before we started PMS Bazaar, it was actually surprising to see. I've been giving example of mutual funds because it is the nearest product for PMS and AAF. Now somebody needs to put money in mutual funds, which is called a potential client basically. They have to do a lot of analysis, right? I mean, which fund to put, and there will be a lot of metrics to look at. Now, there have been plethora of information which is available in online when it comes to mutual funds. But unfortunately, it was shocking to see hardly there were no information for a potential client to see which and all the product which is available in the country if somebody wants to invest in a PMS and alternative investment funds. Just people having a money and somebody wants to put money in a PMS or an AAF doesn't mean they might be rich at money, but they're very poor when it comes to data. Whereas in a mutual fund, there have been plethora of information as mentioned. There have been significant data which is available. Now, we've been trying to identify why there is a huge gap in this space, and we understood that there is a huge challenge to aggregate the data. And fortunately, we took the decision that why don't we take this challenge. And when we started, it was about 7-8 companies. Actually, the source of the data is a respective asset management company. Whereas for mutual funds, there is an association which is called AMFE, and the data will be updated every day on the return side. And when it comes to portfolio, it is updated on a monthly basis. So anybody can go and take the data from an AMFE, which is a core source. In addition to that, you have a lot of website which is available. Whereas in PMS, there is no such association. So hence, we are completely dependent on the asset management company. So when we approached with this idea with asset management companies, they had a mindset that being the HNI product, why it should go to the public, and they wanted to keep this product very secret. Why they want to keep secret is what our argument was, and finally to start with, there have been 6-7 portfolio managers who supported us, and we have put this data in our platform, which is pmsbazaar.com. And today, as we speak, we have about 150 plus portfolio managers and 270 plus funds, which is approximately 70-75% of the industry size. And the response what we have got from these ultra HNI clients is mind-blowing. Every 30 minutes, we get one client who is registering in our website and who do a deep dive analysis. So we are, as a PMS Bazaar, we are instrumenting. We are a bridge between the asset management company and investors, and we are helping the investors to make an informed decision, and we give a lot of information which is similar to mutual funds. So this is on the investor perspective. Now, there is an institution setup, right? I mean, there is a wealth managers, there is a family offices, so on and so forth. So these type of institution investors generally do a lot of deep dive analysis. It could be rolling return, or it could be point-to-point return, or it could be standard deviation. There are a plethora of metrics which generally institutions do. And For them, there was again a huge gap because they used to get this information again for mutual funds by paying a premium to a data partner. But today, as we speak, we could able to bring that through our platform called Finalica, which Daniel was mentioning. And today, as we speak, there are about 55 institutions who have subscribed to this data. So not just for investors alone, even for institutions, we have created a product. And when it comes to credibility on PMS Bazaar, the data source can be from a original source. Let's take an example of X is a PMS company. Anybody can approach X PMS company and take a data. But still, people prefer to take the data from PMS Bazaar, including media. And when I mean media, any popular media in India, when it comes to financial, being it money control, I mean, I can name a lot of medias. Every media use our data. And every clients, most of the clients use our data. Institution use our data. And there is an intermediates like an individual financial advisors, research analysts, so on and so forth. And including them, they are using our data. So this is how we could able to transform this industry. And when we started, we had a larger vision, and we thought this will happen in a decade time. And thank God it has happened, even less than that.
So Pallav, you told that as the HNIs are close to 1.5 lakhs who would invest in PMS. Now, can you tell me how many people have logged into your site? And on average, how many people log it daily?
Yeah, that's a good question. In fact, I missed to mention that. As we speak, we have close to 40,000 registered users in our website. So that is a kind of, and every 30 minutes we get at least one registered user. And 90% is from India, and balance 10% is across the globe, including UAE, because we have a lot of NRIs. Indians have been, situated in other countries, and they are also investing in PMS and the AAF, and we have been very, very instrumental in supporting NRIs as well.
Again, what's the opportunity your company can provide for the participants of Money to Conference?
Come again, sir.
What's the opportunity your company can provide for the participants of Money to Conference?
See, anyone like to generate wealth, right? So obviously equity is one of the asset class whereby you can create wealth, like how you invest in gold or FDs or in real estate. So equity is one of the asset class whereby you can create wealth. So what we are specialized in is like, so we are the experts of the alternate investments, and we are the one of the pioneer company in India whereby we are the experts of PMS and AF products in the country. So obviously, when it comes to equity market and when it comes to structured products or privately managed investments, we are the experts, and we can provide any sort of support, not only specific geographic or to a location. So we can service across the globe. And our HNA desk and NRA desk is one of the best investment desk in the country, whereby we can provide investment solutions across the globe. And so right now our corpus, like maybe 15 to 16% of the corpus that what we manage or what we advise is from NRA desk. So obviously, if any participants of this Money to Conference would want to have any sort of solutions or requirements, so we are happy to help them out and help them to reach out there, make them to create wealth for them or for their clients as they could.
Again, on this, what are the different types of AFs? Now we got Cat 1, Cat 2, and many people know that much.
Understood. Yeah.
On this. Can you throw more light, Pallav?
Yeah, sure. And even before addressing that, just to add upon Daniel for your previous question, what are the opportunities could be with this attendees of Money to Conference? In fact, of course, end of the day, everybody wants to create a wealth, and we'll have to diversify. This generally diversification can be a different way, and India would be one of the best destination to invest. Believe me, investors will create a lot of wealth by investing into Indian equities, not just equities, but a lot of business. And that would be a great opportunity. Either you can create wealth by investing in India, neither you can advise your client to invest in India, nor both can happen. You can invest and you can ask your client to invest also. So that is one thing I want to mention. And jumping into your question on the categories, different categories. There are three type of alternative investment which is defined by SEBI. First is category 1. Category 1 is a very interesting category which invest in startups or a social venture. So this is category 1. And category 2 is the largest category across. There are 3 categories, right? I mean, this category 2 alone comprises of 80% of the industry size. Now, what happens in this category 2 is that it is sort of a mechanized product. You will see. You will find a lot of real estate product over there. You will see a lot of distressed properties, products over there. It tries to give you with a low risk fixed return, 12-13% is sort of return, and we have seen there are funds which is also giving about 18% return. And since the interest rates keep coming down in our country, we see a lot of people are jumping into this alternative investment, specifically into category 2 in a different asset. The interesting fact is that recently there is a product where the underlining is investing in a film content. It is structured in a dip. So there will be a lot of interesting product which we could be able to see in alternate category 2. And category 3 is basically again investing into equity. And but what are the difference investing in mutual funds and PMS and when it comes to alternates? Broadly, all this alternative investment funds comes with a locked in period. Broadly, not that every fund, broadly it comes with a locked in period. So in category 3, the difference when comparing with category 1 and category 2, in category 3, the fund manager can take a leverage up to 200%, which means if you put 100, you can leverage up to 200. So these are the 3 categories which is available, and category 2 is the largest category. Category 1 is broadly on the startup and social venture and so on. Category 2 is more of a real estate. When I mean real estate is not typically putting in a property. It is AF is a basically pooled vehicle. They collect the money and they mechanize the product like a debt structure, and they will not put it in a single property. They'll put it in a multiple property. And it comes with 5, 6, 7 years, and till then you keep getting returns like an interest flow, and then after 5, 7 years you start getting your capital back as well. In category 3, as I mentioned, which the only difference is the leverage what you have seen there.
Any questions from the audience? Yes, sir.
Hi, I'm Pankaj here. Over a period, since the PMS products have been launched by many of the companies, overall, if you see, they have been very tight-lipped, right? With regards to their portfolios also and their benchmarking also. If you see in the mutual fund industry also, it was a similar scenario a few years back. The name was different, the benchmarking was always different. So you always had a confusion as to what is being benchmarked and what are the returns being shown, even in the advertisements and to the risk profile also. So how do you tackle it with respect to the PMS? Because that is still not done in PMS industry as of now. So that is one question. And secondly, even if since you have done a lot of research on maybe the top PMS which are there operating in this space. So how do you validate that data? Because again, many of them may not be that open to, again the same thing with regards to the benchmarking of what they have done. And since it's a very dynamic market, since PMS is not that, bound by like what happens in mutual fund benchmarking, the portfolios can change, the products can change. So it's very dynamic in that nature. So benchmarking is always a question, and then the data part of it, the data validation. So there are two questions in this.
I really appreciate it. I'll take the first one, Danny, and you can address the second one. Yeah. So first, let us understand, SEBI is very clear that PMS cannot be akin to mutual funds. Now, I think we'll have to look at the differentiation on the product. What a SEBI says, in fact, SEBI has set a boundary for a mutual funds. Let's say if I'm a fund manager, I have 100 rupees in my hand, and I cannot invest 11, 12 rupees in a single company. There is a restriction. And there is a cap in a single sector. There is a cap in a single stock. And there is a lot of restriction. I cannot able to take a cash call. Let's say I have 100 rupees, I can't have it in a cash, even though I see that there is going to be fall in the market. And these are all few examples. There have been a lot of examples around. Looking at the PMS, there is a huge difference here. I see there is a huge difference is that the fund manager has a complete freedom. There is a no cap in a single stock. Technically, a PMS can run in a single stock, but nobody has did that, but I'm saying that it is possible. Second, there is no cap on the sector. And third, obviously, you can take a cash call. You can see that even at 100%. We have seen a lot of fund managers who have taken a cash call at an appropriate time. And sometimes it works and sometimes it doesn't. But still, there is an option for a fund manager to take, this kind of call. So as a product, it is not a comparable product. Even though the underlying can be an equity, it is not a comparable product. And hence, there is a freedom for benchmarking when it comes to PMS. Now, does it mean that PMS managers doesn't have the benchmark? No. Every PMS fund manager has a benchmark. There is no predefined rule. As such, we have it for a mutual fund, and benchmarking is mandate. And second is that they also define which is a large cap, which is a small cap, and which is a mid cap, and so on and so forth. There is no such definition for PMS. There is a complete freedom. However, since already there is a definition which is given in the mutual fund, we try to incorporate the same at PMS Bazaar level, and we push this portfolio manager to follow the same level. Say, for example, if there is a large cap fund, and there is a definition how much allocation you should have in a large cap stock, and that is not the case for PMS. Now we try to push that as well. Now we did an interesting study, because as Daniel mentioned, we also tied up with CRISIL, right? These are all mandate for a ranking. What we have seen is that it is almost similar to mutual funds. There is no much of a deviation. But if you have asked this question 4 years back, you are 100% right. And I'm proud that we played a very vital role, for this kind of transformation we have seen. So on the validation, I think my friend Daniel would address this.
Yeah, so the validation and authenticity is what your question is, right? So we have took that challenge because of the reason we are all here, right? So in India, that was a gray area where nobody want to take that risk of give authentication of the data what PMS companies are releasing every month. So before 2020 October, there is no such reporting structure was there in SEBI site. SEBI runs a site where all the portfolio manager needs to update their monthly performance in a format which was given by the regulator. Before 2020 October, all the portfolio managers were supposed to give the firm level reporting. For example, portfolio manager runs 4 different PMS strategies. He will give a combined performance of the 4 products. And also, subsequently, he will run some proprietary investments also. Maybe the owner of the company might have his own investments. So he will club everything and he will give that information as a pooled performance report for the month. So before the regulator come with this circular of giving a strategy-wise returns, so PMS Bazaar took that pain from 2017. So the amendment was issued in 2020 October, but we took this initiative from 2017 to collect the individual strategy performance data from the portfolio managers. That will have its own validation metrics, whereby we collect the NAV of the fund, we collect the holdings of the fund, we try to capture the transactions. So with that multiple permutation and combinations, we try to validate the performance, and then we try to publish that thank God now SEBI has a bit of information which is helping us to give 100% authentic data to the subscribers, to the users of PMS Bazaar platform.
See, initially we have been facing difficulty, honestly, because there is no predefined rule that how a portfolio manager should report their returns. Somebody will say that this is my first client performance, and somebody will say that this is my model portfolio return, and somebody will say that aggregated return. There have been 7 different reporting in PMS. What we did is that we funneled it to two reporting. It was very, very challenging. It took almost 1.5 years for us to make this 2 different reporting. One is model and one is an aggregate reporting. Fortunately, SEBI has come in and they told that, they've defined that how you will have to report. Now they've made it very clear that it has to be reported based on TWRR methodology. Now it has become uniform for entire portfolio management services industry. And once it has come in, the challenges has come down because they will have to report to SEBI as well. And earlier, as Daniel was mentioning, it was an aggregate of all the strategies. And it is going to be strategy-wise now reporting. And if you look at SEBI data and if you look at our data, and it will match. If it is not matching, so either SEBI data should be incorrect or neither our data should be incorrect. And most of the cases, SEBI data has been incorrect, honestly speaking. So, and what we have seen is that, because of these challenges earlier we had before this TWRR, and now after this TWRR, it has drastically has come down. So I'm not saying that it's going to be 200% perfect, but still, this is the only source you can rely upon. And we also have internal metrics. Say, for example, we have a bench. Let's say that there is a large cap fund, and the benchmark should be Nifty. And let's say Nifty has performed 5%, and if a portfolio manager has delivered 10%, which is 100% different than Nifty, in that case, there will be pop-up from our software, which will come to scrutiny. Then my teams, look at the portfolio, what was the stock has been bought by this portfolio manager, because we also have the stock data. Has the stock has moved, to the proportionate of how this performance has been. And if there is any clarity we require, then we contact the portfolio manager. And if the answer is convincing, and only then we take this data. And every month, at least 2 to 3 performance we don't publish. And earlier it used to be 30-40. And just because of TWR and just because of few methodology what we brought in, now it has become 3-4. And hopefully it should become 0 in future.
It's more like doing a reverse engineering, from the data what we get from the portfolio manager. If it is not matching with the index's performance or too much variations, then we do the reverse engineering.
Thank you all.
Thank you. Let's give these guys from PMS Consulting a round of applause, guys.